Understanding Kiwi Bonds, a comprehensive overview. Kiwi bonds, a unique offering from the New Zealand government, are fixed-income securities designed to attract local investors. They not only represent a safe investment option for New Zealand residents but also resonate with the cultural identity of the nation. In this article, we will delve into the details of Kiwi bonds, including their structure, advantages, disadvantages, and the broader economic context surrounding them. What are Kiwi bonds? Kiwi bonds are fixed-income securities issued by the New Zealand government, offering a stable and secure investment medium for local residents. These bonds feature fixed interest rates that are paid quarterly, and they have maturities ranging anywhere from 6 months to 4 years. Investors can enter the market with a minimum of $1,000 and can invest up to $500,000 for any single issue. Importantly, these bonds are exclusive to residents of New Zealand, making them an appealing, homegrown investment. Key features. Denomination: Kiwi bonds are issued in New Zealand dollars, NZD. Interest payments: fixed interest rates are paid quarterly in arrears, ensuring a consistent stream of income for investors. Maturity periods: available maturities include 6 months, 1 year, 2 years, and 4 years. Investment limits: a minimum investment of $1,000 is required, with a maximum limit set at $500,000 per bond issue. How Kiwi bonds work. The choice of the name, Kiwi bonds, is not just whimsical, it's deeply rooted in New Zealand's identity. The term Kiwi colloquially refers to New Zealanders, and it stems from the Kiwi bird, a native symbol of the nation. The bonds serve as a way for residents to invest in the economic stability of their country while also keeping their money safe. Kiwi bonds stand as one of the main investment options for individuals in New Zealand, primarily because they are fully backed by the government. This backing significantly decreases the likelihood of default, typically seen as a risk in bank-issued and corporate bonds. However, this security comes at the cost of lower interest rates compared to other types of bonds. Interest rates and payment structure. Interest rates for Kiwi bonds are reviewed regularly by the New Zealand Debt Management Office. As of February 2021, the interest rates were as follows. 6-month bonds, 0.25%. 1-year bonds, 0.25%. 2-year bonds, 0.5%. 4-year bonds, 0.5%. Interest is paid quarterly, but payments are made in arrears, meaning investors receive their interest payments after the end of each quarter. Who can invest in Kiwi bonds? Eligibility to purchase Kiwi bonds is strictly limited to residents of New Zealand. This provision ensures that the funds raised through these bonds are utilized within the country to bolster its economy and public projects. Unfortunately, New Zealanders residing abroad or foreign nationals are not permitted to invest in Kiwi bonds, thereby restricting this investment option to the local populace. Advantages of investing in Kiwi bonds. 1. Low risk. Kiwi bonds are considered a safe investment due to their government backing. The likelihood of the New Zealand government defaulting on bond obligations is extremely low, making these bonds an attractive option for risk-averse investors. 2. Economic stability. New Zealand's economic framework has generally remained stable, even in the face of global economic challenges, such as the 2020 financial crisis. This resilience creates a conducive environment for investing in government securities like Kiwi bonds. 3. Fixed returns. For those seeking predictable income streams, the fixed interest rates provided by Kiwi bonds are an appealing feature, particularly for conservative investors looking for low-volatility investment options. Disadvantages of Kiwi bonds. 1. Low returns. Despite their safety, Kiwi bonds offer relatively low rates of return compared to other investment vehicles such as corporate or bank bonds. Consequently, they may not attract investors looking for higher returns, especially those willing to accept more risk. 2. Investment limitations. The stringent eligibility criteria limit potential investors to only New Zealand residents. This exclusion can be frustrating for Kiwis living abroad who may want to maintain an investment in their home country. 3. Opportunity cost. Investors may find that, while Kiwi bonds provide security, they could potentially earn a higher return on their investments elsewhere. Therefore, those who can tolerate risks might prefer options that could yield more considerable financial benefits. Conclusion. Kiwi bonds represent a compelling investment option for New Zealand residents looking for a secure way to grow their savings. While they provide low-risk returns backed by the government, the interest rates may not be sufficient for investors aiming for higher yields. As New Zealand continues to navigate the shifting economic landscape, Kiwi bonds remain a cornerstone for local investment, embodying both cultural significance and financial practicality. Potential investors should weigh these factors carefully before diving into the world of Kiwi bonds.